Okay, hello guys. Welcome to another video. In this video, we are going to talk about supply and demand, and a lot of people also call it POI, point of interest, price of interest, or whichever name they give it. But in a simple terms, we can call it supply and demand. And in this video, you're actually going to understand why and which supply and demand has high probability and the one that doesn't have high probability. The one that is about 50-50, then the one with high probability you can take your trade from. So let's dive into it. But before I go, I want you to understand that supply and demand also matters. We can also trade it depending on the trading condition. For example, if we are having a consolidation because we have three major trading conditions, which we have the uptrend, the downtrend, and the consolidation. So if you are talking about the uptrend, it's a situation whereby market is giving us something like this, and the downtrend is the opposite. Market is trending in one direction. Then the consolidation is the one we see the market is not really moving. We'll create something like this. We just keep ranging. So as you can see, market is not really giving us a specific direction. Although it's tradable, but a lot of traders lose their money in this situation because market is not trending, so they try to avoid it, and it's wise for anybody to avoid such situation. But supply and demand can also work for this because it's all about movement of the market from one zone to another, liquidity, and so on. So but in this video, I don't want it to be too long. I'll talk about, let's use the bearish momentum as an example, and um, you will get to understand how to picture the market when the market is moving down or when the market is buying, probably bullish. So, but the same principle is applicable. So, let's say in a situation that we have market creating, remember, you have to factor some things before you can understand where the market is going. That's why structure mapping is very, very important. So for anybody that also trade SMC, so you have to understand that structure mapping is not just about the entry, the chart, or it propel you to understand the directional bias of the market. So let's say in a situation that market is moving down and we want to map our structure. One of the things that we need to put into consideration is the liquidity that the market is printing. So as I explained in my previous video, so if the market is moving down this way, this is not break of structure. We have to wait for market to come and take the recent pullback like this. Then markets give us breakdown. So we have something like this. Then this will now serve as our break of structure. So it means that in just a layman language, we have this is what we had. So we have lower low, lower high, then continuation like that. So you can see that um, we have a break of structure here. So let's say we are looking for the supply zone because we are bearish. When we are bullish, we talk about demand. We are looking for supply zone that are actually going to work. Which one is high probability, and we'll try some different scenario that we can overcome in the market. So why is this break of structure? Is because market has taken out some kind of liquidity here before it breaks down. Because we understand that it's only liquidity that do what? That move this market. So how many we don't know, how much liquidity we don't know, because market can still push up to this level and still drop. It's still the same thing. But as long as market drop below here, we understand that we are trending from here to here. So now this is our high. Market must not break this high if this momentum want to continue. So what are we going to look out for? First thing we are going to look out for is to mark the last pullback, which we call our inducement. this is not going to be a valid supply. This is a supply, this is a supply, and this supply can be as a form of order flow, but let's refine it to order block. So, and also this is a supply, this is the extreme supply, because this is where the last momentum, the buy momentum, when the market buy before we start seeing the selling. So this the recent place that the market bought before we start seeing the sell. This is the second one then. So anywhere the market pull back, that do something like this, let's say we are coming down, a market buy, the level that the market, the last point that the market got to before we start having something like this level, this level, this level, those are supply zone. So how are we going to know the one that will hold? First of all, using this scenario, this one is cancelled because this one is a trap. We are not going to use this. Why? Because liquidity is resting above it. And we said markets must take at least one. So that's why we can't reckon with this one. So now this supply zone is not going to actually work. Let me label it red. This supply zone is not going to work. So this is like a trap in the market. So you should avoid something like this. So then which one is it going to work next? According to this diagram, we can pick this one. We can pick this one. But when market get back, though when market is coming here, you will see some kind of reaction and it will fail. But when market get back to this level, this 50-50. Why? This is a decisional. This supply zone is like out of 100, is it has a little bit 50% probability, like half this thing. So it's not certain, but let me say it has low probability that market is going to respond to this here. But when it comes to this one, we have high probability. Why is it that we have high probability? First of all, this level has taken out liquidity, and we are expecting this high to be protected like this. Then why is this not going to be high probability? Because this this level serve as a liquidity, then this also serve as a liquidity for this. So markets might come here and also react a little bit to this one. Then when market get to this place, it has cleared that market has taken out all the liquidity, and this is the only place that markets can get to before the market continue in the bearish momentum. So that's when you will now see a situation whereby markets will do something like this, then will now start dropping. So this is the first scenario. Then when the market drop, it means we have a break of structure. So if you now have a second situation whereby market do what? Market have this same thing like this, and we have in this place we have 1, 2, 3. In this place we have 1, 2, 3, 4. We have 4. And now first thing we need to mark is we understand that this is not going to work. So this is going to be our inducement. So we are not going to take any trade below here. So what we need to watch out for is in this situation now, we have to come to the top. Okay, we have a liquid. Let's say this is our order block like this, our supply zone, and we discover that when this one push back, it has mitigated this level. So it means that this zone has been used. We can't use it again. And we come here again, we see that this level, this move hasn't mitigated this one. Maybe it just created a very close move, then little fair value gap. Now we have the only POI that work. Remember, I said two. This one now is not going to work because it doesn't. It's not that it's not going to work, but it has low probability that it's going to work. Why? Because there is a liquidity above it, and market has this one has taken out this liquidity. Then this one has been mitigated. This one is the only one that is not that hasn't been mitigated, and this one is for the inducement. So it means that when market comes to this level like this, so it means that when market comes to this level in this manner, market get to maybe market move to this place. Some people will want to sell here, and probably maybe they will set their limit order here, they will put their stop loss here. I'm just showing you why it fails sometimes. And what will market do? Market will give them a sign that it's selling, and you will now see that it will go and take out their stop loss, and it will start coming down. So this is another situation that will enable you to understand the supply level that works. First criteria is inducement must be taken, and the second criteria is that the extreme must be there. This is the extreme that hasn't been mitigated. So let's now print a scenario that this decisional POI, which is the first the 50-50 supply zone, will work. In this situation, let's say we have something like this, and market comes here, mitigate this level, and we have a situation whereby this is our this is going to be our what? Our inducement, and this is going to be our uh, POI. But let's say this one has been mitigated by this, the same way we explained in this place. So let's say it has been mitigated, and we have this level remain. So that's why we have only this one. So when market is coming back to this level like this, you will see that this is the only place that the market will respond to, and the market will drop. So there is still another situation. Let's assume that something like this happen, and market refuse to mitigate this level, and market just drop without looking back. Now, what are we going to do here? Some people will say this is the break of structure. Yes, this is supposed to be the break of structure. But until market created another inducement for us, for example, like this, and drop, that's when we can confirm this as a break of structure and confirm this high as our high. Why? But if that doesn't happen and we have just this level, it means that we will shift this movement, this inducement to this level, because this high is where the major liquidity is resting. So it means that we are just going to be observing what the market will do. Whether market will print something, let's say market print something like this, refuse to break down, and it started moving up, and it started moving up, and it started moving up. It means that market is targeting this, using this as an inducement, because we've shifted this inducement to this level. Then that's when you see market mitigate this level, the market will start dropping. So a lot of people will get trapped thinking this is a supply zone. No, this is not a supply zone, because no inducement and liquidity is resting above it. So in a layman, what are we having here? This is just what we are having here. We have a push down, push up, push down. Then this level will serve as an inducement. But if you are going to look at it based on impulse correction and how we were taught, or how most people think this higher low can be marked, it means that with all these are just going to be one leg. The market will come back, take out this inducement, the market will continue. So the I think we have a lot of illustration already. So I will explain. Let me show you how this actually look like on the chart. And let me clear this. So look at this. Time frame doesn't matter. So I want you to understand that this happens in lower time frame, 1 minute, 2 minutes, 3 minutes, and to the higher time frame. So, but the difference is just like it is faster in lower time frame than the higher time frame. So let's look at this. So let's say the market is buying, and we were able to spot, say, okay, market creates sweep here. So this level seems to be our low. So now it means that we are looking for bearish momentum. So look at this. When market, let's say this is a change of character. So now when market do what? When market change character, what are we supposed to be looking for? We're supposed to first identify what? Identify our inducement. Where is our inducement? The recent pullback before or after market break structure or change character. So this is the recent pullback that we were having. This level is the recent pullback that we were having. This is just what is mostly important, because markets only need the liquidity above it, the stop loss above this level, because a lot of people have their stop loss above here. You need the money here to keep moving. And we can't say because it will take out the inducement, it must come and mitigate our POL, or let me say supply zone. So if we are to mark supply zone now, we need to start from up. So the supply zone must be the last momentum. If you are to mark here, everything has been mitigated. So this is the only last place that the market got to before what? Before you start selling. So you can see that, and this one has a criteria. You can watch my video how to identify valid pullback, valid POIs, and so on. So how to identify valid supply and demand too. I have it explained in my previous video. So, and one of the criteria is there must be a fair value gap. You can see there is a fair value gap here. So that's why we do what? We mark this level. But you can see we can't control what the market will do. Market has taken out enough liquidity and it's decided to drop. So what do we see here? We have break of structure. So it means that if you're waiting here, we might have a missed trade here, which is fine. So after we have a break of structure here, what do you think the market will do next? Or what are we supposed to do? All we need to do is mark the high of the market like this. This is the highest level and this is the low. Then where is our inducement? This is the inducement like this. So this level serve as our inducement. So where are we now going to look for our supply zone? If we are to come here, you can see that all this one has been mitigated. All this has been mitigated. And why? There is no fair value gap. So no fair value gap. So it means that all this has been mitigated. And we need to go to the swing point again. So if we are to look at this buy candle, which is this, no fair value gap. The second one, which is this, no fair value gap. The third one, no fair value. This is the only one that has fair value gap and is the only supply zone that is valid for us. So you can see in this case now, our work is to come to lower time frame, maybe 1 hour, 4 hours, and be looking for entry here. So you see how nicely market mitigate it. Remember, this is the only valid supply zone that is available. So in this situation, you can see that market push down and break this level. So what are we going to look out for? Immediately market break this level. Now this is going to be our inducement. We are expecting the market to come up. So after inducement, what are we going to look for? This push has mitigated this level, so no fair value gap. And you can see this is the only fair value gap that we have and is at the extreme. So this is high probability. So, but why do market come back there? First of all, you can see that we are expecting the market to come here and drop. But what does market do? Market created another inducement. So it means that we move this inducement to this level when the market is still here and market keep pushing down, keep pushing down. So at the end of the day, this is the only inducement that we have. We have a minor one here. If you watch my video on how to identify valid pullback, you will see that we have a situation whereby market did something like this, push back, then come down. So, but this is the major one. So now, in this situation, okay, let's reckon with this one because is the last one. So we are not going to talk about the minor or the major. So you can see now after this is the liquidity inducement. Then we have to look immediately after it. Where is any other block with fair value gap? I think we can see something like this. This is the last buy momentum with fair value gap. If I expand it, you can see that there is a fair value gap in between this candle like this. You can see very tiny fair value gap. So you see market refused to respond to this level. When the market first mitigates it, it gave us a very small bearish momentum, like sell momentum. But because this is the high probability, and this level too, this is also another block, this level. That's why I said the only one that work, this is going to be the 50% probability, and this is more of high probability. Why? Because this high must be protected by all means. So, and this high has grabbed the previous liquidity. So this high is high probability. So if you are trying to sell here, you are going to be an SMT, because SMT means spark money trap. So because if you are selling here, for example, people that are selling here now, they will put their stop loss here. They are trying to sell here. Their stop loss will be here. And you see, they will be targeting down. Another set of people will say, oh, this is a supply zone. Then they will be waiting here. And you see, their stop loss will be here. And they will be targeting down. And at the end of the day, until market gets to the extreme, and you see, that's when the reaction. But you that understand that this is the only valid and high probability supply zone, this is a little bit high low probability supply zone, then you will understand that. Let's even say you are trying to buy sell here and the market fail, you will decide to understand that this is the high probability. And let's say you now come here and start looking for your entry and decide to put your this thing here, then remember, you are not going to take trade based on daily time frame. You are only going to go to your lower time frame and place your trade here and look for your entry confirmation and start selling until this level has been taken out. So you can see how simple this supply and demand of the thing is. It's just like a lot of people keep giving it different name, different name. But the point is, it's all about liquidity. It's not whether the the it's not whether this is the level that the market that sold the market that lead to break of structure, all those names. No, there must be a criteria. If someone asks me why is this high probability, I will tell you that we have a liquidity here. According to my plan, inducement has been taken. There is a liquidity resting here. There is a liquidity resting here. So this level serve like a liquidity to this one. So it's highly proper. There's high probability that market will want to come there. And this level is not resting, is not serving as liquidity to any POI above. The only situation that can make this level not to hold is either market change character or market decide to do its thing by doing external liquidity sweep. So, but it happens in a rare cases. So this kind of a thing, you remember, there's no perfect strategy, there's no perfect approach to this market. But with this understanding, you get to understand why and where to position for your trade. Let's